Well, happy Friday, team. Okay, here's the deal. System-wide capitulation today. Everything in the red. Stocks, bonds, crypto, except real estate. That's right. Real estate didn't lose any value today, did it? So some people say, well, you never know. Maybe real estate went down today. Check Zillow. Well, see, it doesn't quite work that way. I'm just going to share this real quick. And done. Okay. So we're going to look at a couple things today. I got some bad news, and some of you like to shoot the messenger, and that's okay. I'll be your huckleberry. The bottom line is what I'm about to show you is not pretty, but mortgage rates are still great. Great. I locked everything today. I locked everything I could lock. I'm waiting on a contract to get in. It didn't get in, which is a shame because I really wanted to lock it today. I got a jumbo. The jumbo market's relatively stable. I'm going to show you some things today. If you want to buy a refi, call, text, NMLS 155010. Let's get down to the nitty gritty. So here's what's going on. Let me move myself to a more appropriate position. Here's what's going on, team. We had a bad day. This today, right here, this sucks for so many reasons. And we've been looking at this long-term trend. I've been telling you, I was at least somewhat optimistic. Even though we had kind of we're running into these moving averages, and I've been telling you, mortgage bonds likely to sell off. What did I say? Was it yesterday, the day before? I can't remember. Hey, the banks are hedging for bonds to go lower. We got some bad inflation numbers. Producer inflation accelerated in August. 8.3%. Record. Rise. Inflation rises record amount. That's not good. That's not good. But, I've been telling you about inflation for months. I told you it was already here. It won't show up in the numbers. The bow tie guys won't get to it until later. That's why your boy is here to help you see these things before they show up, before they get baked into the cake, which is starting to happen now. We'll just look at some of these things. So here's crypto. Bitcoin getting smoked again today. Still mid 40s, kind of where you expect to be. Low 3,000s for Ethereum. This is a good time to buy this stuff, by the way. XRP about $1. Who cares about Litecoin and Bitcoin Cash? Oil, still around $70, holding on strong there, under 1,800 for gold, still there, just boring. Here you can see the 10-year going up, bond rates going up, right? So why? Because when prices of bonds go down, the rates go higher. That's why we want to see higher bond prices. We want to see moves like this, right? To higher prices. This is what's good for us. We like this. We don't like this stuff right here, like this big sell-off, which we saw right ahead of a Fed announcement for tapering. We don't like this. Right now, we are seeing essentially a bearish flag playing out. So this is not a very good line that I drew right here, but essentially there's a bear flag here. And it's squeezing right in this area, and it's squeezed, unfortunately, out to the downside. Now, I told you to be prepared for this. I told you yesterday. I told you the day before. Have a locking bias. In this whole, these 2 days, I said lock, didn't I? And then today, I locked everything. Now, the way my pricing works, this 30 basis points that we lost here today, that's not going to show up until Monday on my rate sheet. So I went all in. I'm all locked in. I'm all locked in. Except for the one contract I'm still waiting on. I don't know what's going on with those sellers. They haven't signed it yet, but if they had, we'd already be locked in on that one. I don't have any good news for you here. This could be a fluke. Okay? It could be. Hey, there's still some support down here at this Fibonacci, right? There was definitely support at this level previously. You see all those wicks sticking out right there. So, maybe it could turn around, but this is not a chart I would want to be long. I would not want to own these bonds looking at this. So does that mean mortgage rates are going to skyrocket on Monday? No, it does not. Mortgage rates are still in great shape. I just don't have that good news I was hoping to tell you, that we busted out through the 200-day moving average and we're heading back to all-time lows. That's not happening. So, but on days like this, it's a good reminder. You look at the markets and you go, man, the Dow is down for the 5th straight day. You're starting to see sell-off in stocks. We warned you about this. The Federal Reserve warned us about this. It's coming. You're going to see stocks come back. They're just simply way overvalued. They're probably trading at least 2x the PE that they should be in a relatively normal valuation model. So not even like being aggressive, just a normal one, not even being conservative. If we're using conservative estimates, you could say that the market's trading at 4 times the PE that it should be, which leaves a lot of room. It's just thin ice. You're just on thin ice. But the beauty in this, in understanding this is, so I'm going to give you one here. Here's a freebie. Let's look this one up. There's lots of ways to own real estate, right? You can buy a house that you live in. You can buy a rental property. You can own securities. I own a ton of real estate securities. Now, some of them are publicly traded. Some of them are not. Why did I do that? It's the most detached way to invest in real estate. Now, everyone should own their own primary home, or at least have a plan to, have a strategy around it. Hey, we're going to buy in a year when we have done this and we're ready to be in that school district or whatever. You should have a plan at least to own your own home. When it comes to investing in real estate, one of the things that's great is you can do it in lots of different ways. You have $500. Look, you can buy this. Buy O. The ticker symbol is O. It's traded on the New York Stock Exchange. It's Realty Income Corp. They've paid their dividend, or they have increased their dividend and paid their dividend on time for 25 straight years. 25 straight years. That means through the crash, through everything. So I really like this one. Just look at the yearly chart and you can see. Right now, it's at, I think, a 4% yield at current day prices. I got this thing when it was much higher than that, but still paying 4%. That ain't too shabby. So days like today, did real estate go down in value today? This is one of the things that's great about owning it. Physical real estate, not the stocks. Did real estate go down today? No. This is just simply a capitulation. This is just stuff being sold because stuff is being sold. So when you see things like that, and you can look at a stock like this and know, well, I guarantee you that the rents of their tenants didn't go down today. Okay. And the value of their real estate, therefore, did not go down today. So this thing, any time that this is down, it's a buy. There's no way. So anyway, there's different ways to own real estate. If you own physical real estate, it definitely didn't go down today. So when you see things like this happen in the market, you may look at your 401k, you may look at your Charles Schwab, your Fidelity account, whatever, and you go, man, we're down today. We don't have those days in real estate. We don't have those days. Now, you may have, days that will come along where you go, oh, well, that comp sold for less than what I expected it to. Or, hey, the house across the street sold for less than what we thought we could get for ours. You may have days like that. It will happen. But you're taking lots of stuff to the bank. You're taking all sorts of tax advantages and different leverage opportunities to the bank that you don't necessarily get with stocks. So main point here, real estate greater than stocks. Real estate really number one, in my opinion, across the board. Even though I do believe that we will see crypto over time, over the next 10, 20 years we're still so early on the crypto stuff. It's going to become so mainstream, it may take over the investment market. That's how crazy I think that could get. Here's one article I wanted to show you because this is probably one of the strongest elements besides what we've shown you this week. The demand element, the supply element, just a flat out sheer numbers, just a lack of homes. It is a legit housing crisis that we are in. We are in a legit housing crisis across the nation. And aside from those two things, the supply and the demand element, which is really all you should need, there's also the undercurrent. Remember, renters are they fill an important vacancy in the price of homes. They do. And this is one of the things we did not have during the crash. We did not have a strong rental market. We had a very, very weak rental market. Right now, we have an incredibly strong rental market. So the data I provided you this week regarding supply, where millions and millions and millions of homes short from the builders. They cannot keep up with the organic continuing demand, much less the backlog. Not even close. The demand. Remember, we looked at the chart of 33-year-olds. That for the next 4 years, the number of people turning 33 is increasing each year. That's homebuyer age, average homebuyer age. So we've got demand incoming. We've got supply not coming. And we also have this underlying rental market, which is insanely strong. So this is a good article. Just check this out. I'm going to post this on the YouTube description. And, just know that this is talking about the number of struggling renters isn't dropping. So people are struggling to rent. It's not that I'm sitting here saying that that's a good thing. But what I'm saying is it's a struggle to rent because rents are so high. That is a positive sign for those who invest and own in real estate. So there's a correlation. And they're talking about a few different things in this article about, different aid and eviction processes and moratoriums and stuff like that. This stuff is necessary because if you are in a rental right now and you hit hard times, trying to get into a new rental is going to be basically impossible, at least for the same terms. If you rented a home 3 years ago and you've been paying rent there, and let's say your rent went up $100 a month per year, well, by the time you get to a new place, it's probably $1,000 a month more, especially here in San Diego. It's just going to be way more expensive. Getting into the same terms is going to be almost impossible. So the struggle on the rental side is a bullish indicator for real estate ownership. It is a huge bullish indicator. I wish, hope, and pray that everyone has a home over their head in this country and throughout the world. Lord, I pray for that. But the reality is we have to look at what's happening, take in the information as investors and go, okay, what can we do here? And if we want to do some good in the world, and I recommend everyone do that. Listen, if you've had some wins the last 5 years, if you've had some wins the last 10 years, if you've come across, if you found some money, if you've hit it big on a crypto penny stock that crushed, give some money to your church, give some money to some missions, give some money to some organizations that are boots on the ground going and helping children and helping people out there. We should be doing that. We should be doing that. And there's lots of ways to do that. But ultimately, as investors, if we're trying to maximize the return on our investment, we have to look at the reality of a situation. It may not be pretty. In fact, the things I'm telling you about institutions buying real estate and what's going to happen with real estate values over the course of the next 3 to 4 years, it is not going to be pretty. A lot of people who could buy a house today are not going to be able to buy a house then. A lot of people who could have bought a house a year or two ago and they waited and waited, they're going to be priced out forever. These are going to become a reality for a lot of people. Some of those people are going to go and end up moving out of California. They're going to go to a less expensive market. And that's okay. That's okay. That's what a lot of people do. And listen, go where you can be happy, wherever that is, if it's California or not. You can always visit California on your vacation or whatever, but go where you're going to be happy, where you can feel okay about what it costs you to live. I know there's a lot of people who are house poor right now. I totally get that. I know there's a lot of people who are house poor who have huge equity and they're kind of trying to figure out, what do I do? Like, hey, I got $300,000 in equity, but I can barely afford to make my payment. What should I do? You do what's best for you. Okay, if that means selling that house and taking your $300,000 cash and going and buying a house free and clear in Iowa or Kansas or whatever, that makes you feel comfortable, does that make you feel happy? You go right ahead and do that. Go right ahead. But I am telling you, and you will see, the values of real estate are going to increase. So, and I'm saying system-wide, countrywide, they're going to increase over the next few years. There's pretty much no way for it not to happen. There's almost nothing that I can see that's going to get in the way. I just can't see anything. And so until we start to see anything that could put a dent in all these factors pointing to higher real estate prices, I can't think anything else is going to happen. That's it for today, guys. Appreciate your time. Share this video. Hopefully it helps make you smarter than everyone else. And if, of course, you know what I do. Home loan specialist, NMLS 155010. Call or text. If you want to buy or refi, I'm happy to help make sure that you get the white glove experience. Have a great weekend, team, and I'll see y'all soon.